All right, good morning, team. This is Day trading the New York session necessarily here this morning on Friday. So I just wanted to come on real quick and kind of give my synopsis on a trade setup for the shorts this morning that we did not take. If you go to the Discord, obviously you'd see my comment there, but this would have played out pretty solid. I kind of jumped on the charts here late this morning and everything specifically, but I definitely wanted to kind of break this down as far as how I would have looked at it and taken that trade. So as we can tell, or generally as we can see, and I kind of state this in my soon to launch beginner's guide necessarily. But overall, looking at today's bias, I'm very bearish. As we can see, current market price is kind of tanking at this point going into New York Open. But we obviously had prior day Asian highs needed to be taken out yesterday, so I saw a lot of potential at least with buys to come up, take this out, and say if it failed to take out or retrace back to these lows, we also have potential to sell off the higher time frame buy side liquidity up there. Um, yeah. So ideally, what I was looking at here this morning, or would have been looking at, say if I jumped on the charts in time, we would have came down to probably the I'm sorry, the 3 minute. Obviously, we can see that entering that first macro, we came through and tapped and then followed through to break the previous day Asian high from that session. So once I saw that, necessarily I kind of came in and kind of saw or looked for some form of inversion on the next time frame, or on the 3 minute time frame. So obviously we had a fair value gap here, a bullish fair value gap at that. We had a break there, and it's kind of more clear on the 1 minute. Again, we had a bullish fair value gap, obviously some inversion there, wick through inversion, retest and break. So ideally, what would have formed this entry? Um, let's see here if we can get more of a clear cut look at it. Yeah, so what we would have been looking at, I'd have counted this as since a break of structure of some sort. Not one I would have ideally entered off of just with the risk of it actually coming up, tapping that, and then t tailing down. So ideally, my break of structure would have been this low. Obviously, that would have been the top of the fair value gap on the higher time frame. So as you can tell, pretty much we came up or we broke through inversion here. So that gives me kind of a confluence to sell off. Obviously, came back. This is some form of liquidity, obviously, there. And that's the impulsive leg going down. So we would have taken this trade, a sell necessarily, and it should have been off of around kind of the 50-ish range of that leg. So if we draw this out with a Fibonacci tool, my sweet spot on my Fibonacci is specifically my 62. But ideally, we're looking at entries anything above the 50 as a whole. So like we see here, price rejected or retested and came up, rejected 62 and at 50 and just pulled down. Ideally, with this being the break of structure, we could enter here, or we could have just waited for some form of off of this inversion fair value gap as well, off of that leg, something of this nature here. And we could have caught, say, the sell from here. So we ran something of this parameter. We wouldn't have risked a full 25 handles like we normally should. So we're about, say, 9 to 10, and ran that down, obviously, for a 1 to 3. A runner on a Friday, it would have been ideal, at least with this trade, because we have to take out sell side liquidity, which we honestly just took out here going into open. So could have been an easy, say, 7.86% risk to reward here on that. So it would have made a pretty decent profit. Would have called it a day off of that for sure. So our daily target, at least my daily target, I have my parameters set for 500 each account. So whatever you feel comfortable as far as a daily profit, margin there with your own trading accounts. Me personally, I go for at least that 1%. Being that I'm scaling multiple accounts here, with the funded through Apex, I don't have to. I don't logically have to risk say like, oh, I need $1,000 a day. My $1,000 a day comes from two accounts, at least right now, two accounts of totaling each $500. So I don't have to risk as much. Again, we're probably losing. If we would have taken an L here, it probably would have been around 100 and $200 at most there. But we would have lived to fight another day or another trade going into New York and everything like that. So ideally, what I want to see next, kind of just some more play within price action going into this next macro. We also have 9:45 news today. So just eyeballing everything, at least right now. So I'm not looking to realistically force any kind of trades. But yeah, I just wanted to come on, give my 2 cents in my analysis of what I would have taken this morning, just looking at price and current market. But yeah, stay tuned. We got some good things in store for you guys. But yeah, we'll talk into the next video, next session. Okay.